Good morning, my name is Christel from Frans, the Klerk Independent Technical Analyst. The first one on our list to discuss this week is Bulletin. Now, our stochastic is sitting in mid-zone on a 44, which means it's not an ideal place to take a position. However, there is an ugly head and shoulder formation. Now, a head and shoulder, double top and triple top are formations that are warning that a possible pullback, retracement, or profit taking can take place. And it basically hints that investors who are in profit should consider taking some. My left shoulder is small and started there towards the end of December of last year. I've got a head and a right shoulder, and it looks like it's working on a bigger right shoulder. That 40-week moving average is being tested at the moment, and this is represented by the red line, a critical level that highlights the sentiment long-term investors feels about the share. If that 40-week moving average, the red line, is a support, it means the long-term sentiment towards the share is positive. As soon as that level changes into a resistance, it means the sentiment changes to negative. So it's interesting to see that it's fighting it at the moment. Will it keep it a resistance? Remember, these are intra-weekly graphs, and only by a Friday close, it's below that line, the sentiment changes then to a negative. My neckline is waiting at 525 Rand and 6 cents. Below that level, this head and shoulder formation will be confirmed, which can take the share a lot lower. However, the highest part of either the right or the left shoulder is sitting there. It's in the week of the 12th of June, and it's waiting at 581 Rand and 46 cents. Above that level, the warning of the head and shoulder formation will be off the table, and we can assume then that the momentum to the top can continue. So as long as we're below that level, the possibility of the head and shoulder is there. And as I said, below that 525.06, the neckline of the head and shoulder, the warning of the formation will be confirmed, which can take Bulletin a lot lower. Glencore. It seems like everyone is keen on the commodities to see what they're doing or what the expectation is. So at the moment, my 40-week moving average is a resistance. The share price has been struggling since about the week of the 2nd of May to keep that 40-week moving average a support. The fact that it's trading below it means the long-term sentiment towards Glencore is negative. Again, look, my stochastic is sitting in mid-zone, an area where it's not ideal to take a position. Also very important on Glencore, there is lower highs. Every time the share bounces, that resistance is coming lower and lower. And that tells me there is not enough buyers to lift the share price and keep it at high levels. And that shows lack of momentum, lack of interest, and tells me that we can see lower levels. Now, lower highs is nothing other than an inverse cup and handle formation. I'm going to draw this for you. There is my cup and my handle, and it's inverse because it's a negative formation, right? It's appearing at the top after a massive rally. Below that neckline, the negativity or the warning of the formation will be confirmed, and that is waiting on a line graph at 95 Rand 70. So the target of a inverse cup and handle, the conservative target, is the length of the handle projected downwards from the neckline where the formation was confirmed, meaning it can go back to 80 Rand 91. The full target of the formation is the full length of the cup projected downwards from the neckline where the formation was confirmed, meaning should that full inverse cup and handle formation play out, it can take the share to 68 Rand 97, if not lower, right? So only above the top of the handle, and that is waiting at 111 Rand and 33 cents. Only above that level will the warning of the inverse cup and handle be off the table, and can we assume that the momentum to the top can continue again. Xoro. Ticker on our exchange, EXX. We can clearly see that it's been lower highs. The momentum to the bottom is clearly in place. A small inverse cup and handle is also have been confirmed this week below 162 Rand 42. But have a look, ladies and gentlemen, my stochastic is in oversold territory. What does that mean? the probability of a bounce to higher levels are there. However, the optimism of that likelihood for a bounce to higher levels will only be confirmed with a positive divergence. What does that mean? When that blue line breaks upwards through the orange line, that is when you can say, listen, the probability is now higher that we can see a bounce. Very important. When do we confirm optimism other than on a formation or a candle? When previous resistances starts to change into support. And the first one is waiting at 165 Rand 19. That level needs to change into a support, because what does it tell us then? Buyers are prepared to buy at higher levels. They are prepared to support the price as it rises. The next strong resistance to overcome, and once that level changes into a support, it's waiting at 177 Rand 81. Above that level, we can start to say, listen, higher lows are being confirmed. I've got a positive divergence, and it looks like the share is changing the trend and turning around. Now, my 40-week moving average is a resistance at the moment, right? That is waiting at 196 Rand 80. And that has changed into a resistance already here in the week of the 30th of Jan, right? We're sitting in the middle of the year, and that level is still a resistance. What does that mean? It means since January, our long-term sentiment towards Xoro has been negative. So we have to wait for that positive divergence, wait for previous resistances to change into a support on a line graph, and then can say, listen, there's higher lows, maybe we can start to accumulate this here. On the candle graph, you can see that it stopped making new lows. It's consolidating sideways, but those resistances are almost at the same levels of the line graph. Needs to change into a support and remain one in order to sustain the momentum to the top. Tiger Brands, one of my old favorites, is now fighting a possible head and shoulder formation, something that we need to highlight, because these are all warning formations saying, listen, this share price can go a lot lower. It's a line graph, so our both shoulders needs touching points on my neckline, right? I've got a left shoulder. I'll draw it for you in red. There's a left shoulder, massive head, and it looks like it's working on a possible right shoulder. Now my neckline, I'm going to give you that level there. It's waiting at around 150 Rand, just below that. Ladies and gentlemen, below that level, we can see the share price going almost to zero, right? Because this level from around 220 Rand all the way back to 150 can take this share price a lot lower. When will the warning of this head and shoulder be off the table? When that the top of the right shoulder, waiting at 170 Rand 98, changes into a support. Above 170.98, we can take a sigh of relief and say, hey, the warning of the head and shoulder is off the table. The share price can move to higher levels. However, below this neckline, and remember, I'm projecting it because I don't know how long it's going to take for the share price to reach that neckline. I mean, let's take it to about the week of the 28th of August. 149 Rand 50, right? That is where my neckline is waiting for Tiger Brands of that warning of the head and shoulder. Below that neckline, we can see the share price a lot lower, and we can see that this warning can take the share price to very low levels. If we look back at history, I mean, let's just zoom out here. The last time this share price traded at around 108 Rand only was in the week of the 18th of February 2008. Now my 40-week moving average is a resistance. That was the first warning, right? That was my first warning, ladies and gentlemen. When that level changed into a resistance, it bounced. It could not go back to that 40-week moving average, and it lost momentum there. That was a very technical negative indication that we could see lower levels on Tiger Brands, and boy oh boy did we not see that. Going back to around 150, bounce a little back to 170 and retracing again. So let's hope this head and shoulder becomes obsolete, off the table, but then we need buyers. We need buyers to start protecting the share price and believe that obviously that there's value, so they start to accumulate the share. All right. If you've got questions, Oh, the time is running out so quickly. If you've got questions, please feel free to email us at admin@fransdeklerk.com or send us via Twitter your request for next week's show. Have a fantastic week. Take care.